So guys, let's talk about trends. We all heard bad news from the venture market last year. What I mean by bad news, like valuations declined, deal sizes dropped down, exits happen not so frequently, and surely there are such rumors that fundraising this year is going to also fall down because investors got less capital in hands, less exits. So these are the news from the market. So questions to all of you. What do you think? What is your opinion? What is going on in venture capital market now? Is it spring coming or it's still winter?
Well, I could share a few things. I think till 2 years ago, never ever you could mention every word when you did fundraising, but not profit. You know? Profit was not cool. It was all about growth. And the last 2 years, investors became more conscious that a company on a certain moment should make money, and you cannot trust anymore that there will be endless new rounds and that you have that new investor that will pour in the money into the startup for a higher valuation and a higher valuation. So I think funds are trying to manage their risks a little bit better. And what I've also read in the VC blogs and on the LinkedIn, that they either they finance later stage rounds because that's less risky, so Series B, C, or they want to invest more early stage, and then get more shares at a cheaper price, of course. And then investing in a venture studio is basically a good idea. Not because we're here with a venture studio, but it's really true because the historic returns of investing from VCs are around, let's say, 25–30% on an annual basis before cost, and the returns in venture studios are around 50% on an annual basis on average. And when you invest in a venture studio, then you have a mix of startups, and you also have, let's say, smarter people or more experienced people that take care of founders and of the process, and you have a shorter time to market, and you can mitigate your risks. But investing in venture studios have their own problems, let's say, especially for the cap table. So you know that yourself. You can explain that yourself. How do you see that? But that's what I see. A few trends. Yeah.
Thank you, Dasha.
I could add from the perspective of founder. So as a real founder, I would say that at pre-seed round now, the sizes of deals are smaller, and the valuations also are smaller, and it is incredibly difficult to raise without income now. So as a founder of B2B startup, for us it is easier, but I think for ones who are in B2C, it is quite tricky to show financial metrics at pre-seed stage. And I would say that my experience in 2023 was the worst over the last 5 years when I was raising rounds.
I think that there are like two big parts to like fundraising problems. So first of all, we are here in Warsaw, which is part of CE, and pretty obviously we not only have this effects from global market, but we have effects of war in Ukraine, which is like obviously negatively affect fundraising environment. But from what we see, obviously, bar is much higher than in 2020 and 2021, but like 2020, 2021 were not regular years for fundraising. So it's like it was pretty different and pretty unusual that so many companies were able to raise money. Now it's much harder, of course, but great founders, great products are still very much able to fundraise, but it's much harder to fundraise if you have not really good products or not like really high quality founders. Yeah, but like for best company, competition among VCs for best founders are pretty high now, because like for everyone bar is higher and investors want to take less risk. But yeah, if you do everything right, it's like very much possible to fundraise currently. Like we are pretty active also. And what I also want to add is that early stages are okay. I wouldn't agree that like Series B or C are easier now. I think it's the other way around. Like it's much harder to fundraise for higher valuation, because probability of exit and probability of high return for later stages now are lower than early stage. So seed stage pretty much okay. Pre-seed maybe more challenging, but still, if you go do everything right, you can fundraise pretty easily.
On the bright side, I would add that in this environment, it's slightly easier to hire great people, partially because of the layoffs and also because of the challenging fundraising environment. So when like a few great people like pull together, so it might be easier to raise. And what we see is a kind of trend to that kind of the number of co-founders is increasing. So from 2 to 3 to 3 to 4, and I think it's also kind of sort of opportunity for some of you.
I also want to add that not only hiring is easier, but user acquisition is also easier now, because much less investment money on the market, and you can acquire user much cheaper than it used to be.